I think we have just got into the right momentum to take this market, cross the earlier highs, and go even higher. The three things which I think are driving this, I think first, liquidity is back, and this time liquidity is back both from foreigners and domestic. Last 5 years, you have always seen they being on the opposite sides. I think this is the time when you are seeing both being the net buyers in the market for many days over the last few days. That is one. I think second, the Reserve Bank has been very positive on the way they have introduced measures on liquidity and rate cuts in the system. Today, from a big deficit, we are getting neutral. There have been a couple of rate cuts, so that always fuels the market. And I think third most important point is whatever is happening macro globally, it augurs well for India from an opportunity point of view. How we leverage that to build scale, time will say. But right now, people are again back on the talking chat that, hey, India is like a good structural story, so let us deploy more money here. So I think we are building a right momentum, right? We just need to get our earnings growth back on track, and we need to keep doing the right things to attract more global capital. The domestic pool of money is very large, coming every month through the SIP. That is not stopping for a good foreseeable future. All in all, I think we are set to make new highs.
How would you assess, Rajat, the balance of risks on both sides of the ledger? Because it's not all hunky-dory out there. That, yes, there is momentum towards a US trade deal. However, there is still the prospect of a slide back into conflict with Pakistan and renewed global growth concerns. Yeah. What could go wrong with the positive setup that you believe in?
Yeah, so that's the beauty of the market. It doesn't go one way up. It keeps balancing out moves on both the sides. And I think any risk that will come will be from an event that today you and me don't know. Right? But more importantly, one of the things which markets have to be wary of, the way the momentum has been building up, you are going to see large supply of paper coming, both in the primary market and in the secondary market. We would have a record DRHP filings for IPOs at this point of time, right? I think we have to be just cognizant that the valuations in the primary market are taken care of so that they attract more investors. That is one. I think the second is you are going to see a lot of secondary sales which will happen, either by the global private equity guys or by promoters. That has been the trend last year also. That trend will happen this year also. But I think the most important risk that I see is if we do not seize this opportunity that the global investors and the global corporates are offering to us today, then it will again become where the markets run ahead of the fundamental. We have to build capacities on manufacturing. We have to improve our growth prowess, and we have to fuel the domestic consumption.
A trade deal, triple crown, UK, India, that's in the bag. EU, India, US, India could be next in line. What are they collectively worth, Rajat, for the market? And how is the market trying to price this?
So I think this could be a game-changing event for Indian economy and corporate sector for this decade, or maybe more than a decade. Why so? I think the India-UK treaty was a first sign to come on where can we be. Look, India is a very large market, not just to produce for global economy, but also to consume what global economy produces. So it's a two-way economy that rest of the world would want to engage with. India, UK done. I think India, EU, you will see on very similar lines of India, UK also happening, right? India, US, I think is something that needs to be watched for. Not just from a business point of view, but also from a relations point of view, right? Because US is right now negotiating with many other countries in the world, right? I have no doubt that we will be on the right side of the trade of all these three big economic partners, right? That opens up a massive opportunity, not just to produce, but also for us to be competitive versus every other nation in this region, where a 140 crore population country can consume what the others produce, and we can produce what the other trade partners from us will consume, right? So I think this is a very important event. Once the government signs, It is up to the individual corporates to make sure that how do they benefit from it.
How are you approaching pharma now that we know that President Trump plans to cut US drug prices?
Yeah. So, I always believe in India there is nothing called pharma, right? Because it is so complex sector and so many different models that you cannot bundle them into one space. And a lot of the noises are actually coming from the global pharma, while most of the wealth creation is happening on the domestic healthcare. If you look at the franchise, domestic formulation, you look at the export models, you look at the hospitals, you look at the retail chains, that is where last 5 years the entire wealth has been built. I see no change happening for the next. The opportunity in healthcare lies more within India, right? And that is where business models are getting centered to. On the export front, I think rather than the tablets, you are going to see more opportunities on the infrastructure and the equipment, from where companies from India can target a very large market in the years to come.
Interesting. And are you participating in this small cap rally that we've been seeing since mid-May, really on the back of this easing of US-China tensions and the Indo-Pak ceasefire?
Look, I think one thing we all are aligned that we will see some geopolitical issue somewhere in the world going now throughout, right? Sometimes it will be away from us and sometimes it may be closer to us, yes. Right? When you do investing, you always have to keep this unknown known risk in your mind, right? But I think more importantly, if you are in the right growth phase with the right company, of course the volatility in the stock will be there, but that will be the first one to bounce back whenever things were to settle. So it is very difficult to factor in what and when you don't know. So I think live with that risk, focus more on the return.
And this touches on small caps, this touches on your point of geopolitics, defence stocks. They have been extending the rally, but are they looking or starting to look overextended? Though the centre has said that Operation Sindoor is not over.
Well, I think this Operation Sindoor makes one thing very clear, that the investment in our defence infrastructure is not going to get over any time over the next few years, right? We have to keep investing, keep building more capabilities, and that holds true for every country in the world now, right? Defense is something which has only come of age in the last 2-3 years from the private sector point of view. I think the re-rating into the stocks have been massive. Now you need to see the order book getting translated into the revenue numbers and the profits. So stocks have run up a lot. I think profits need to come, but this is a sector which is going to keep investors interested for quite some time.